Welcome back, you legends. I'm Dr. Cal, and let's get right into today's quick update video. We just finished the stage 1 of this deadly trap that the market is setting up. And unlike any other video, I want to start out this video with a look at yesterday's thumbnail. Why would I do that? Well, because I shared this projection in yesterday's thumbnail. Now I want to show you what happened today based on this projection. My projection was we tag this support line, then we rally higher, fill this gap, and for the crash to start. So what happened today? Let's take a look. This is the exact same projection. It's been left exactly unchanged. So what happened today? We got the tag of the support line. We got a very interesting hint today. Notice this. This is the first time we broke the support line intraday. When you see something like this, it's the market hinting at something happening. What is the hint in this example? If you notice, legends, before we tagged it, very quickly recovered, tagged it, very quickly recovered. Today was the first time we broke it. We had 3 hourly candles below the support line. It's an indication that this support line is losing significance. And that's a huge check mark for the bears, the bearish side. That's what you want to see. Those are the kinds of hints that you want to see. You want to see supports get taken out. Then you want to see the market set up a trap, a very nasty, vicious, deadly bull trap. And that's exactly what I think is going to happen over the next handful of trading sessions. I think the market is setting up for a huge counter trend rally, potentially all the way to fill the gap at 450. It could stop short of that. I think the range that I'm looking at is this. Anywhere between the bottom of this gap and the top of the gap, I think the rally will likely stop there. There's a very small chance, I would say very small probability that we'll see a break above this trend line. This is the trend line that connects the July top and the top in late August, early September. And if the market broke this support line, at least intraday, there's a very real possibility, although a slim possibility, that we'll see this resistance line get broken, fake a lot of people out, fake a lot of bulls out with this fake out breakout, and then continue to crash lower, close below the support line. Third and final nail in the coffin of this rally is a close below the support line. The first hint is an intraday close. The second thing we want to see is a fake out counter trend move to suck in a lot of liquidity, a lot of bulls, trap them, and then commence the reversal all the way down, close below the support line. Once that happens, a close on a daily basis, not an hourly basis, on a daily basis, I think we likely form a bear flag, continue lower all the way to fill this gap. In fact, I do believe this intraday break today of this support line opens the door to fill the gap at 431. And that's still my expectation into the end of September and potentially into October. So very simply, legends, number 1 is the intraday break of the trend line. However, we were looking for bulls to step in, and they did. In fact, I shared this in the trading community. They finally did step in at an extremely oversold territory on the RSI and an extremely oversold area on the stochastic as well. Now, step 2 is the counter trend rally. We want to see a counter trend rally. Preferably, my preference is a rally all the way to fill the gap at 450. It could stop short if the market is extremely bearish. We could stop short of that at 447. And we could go even higher, take out this resistance line, move even higher, complete a double top, and go back all the way to 453. I give that the slimmest chance possible. I think the most likely scenario is a rally to 450, anywhere between 450 and 447. Once we get there, I'll be looking for rejections. Once we get those rejections, I'll be looking for stage 3, sell off all the way down, close below the support line. And I think that is the final stage. Once that happens, we get the crash that we're looking for all the way down to 431. That would be a $20 crash from 450 all the way to 430. What does that look on our detailed 1-hour chart? Here it is. We did something absolutely significant today. We had this gap, this interesting gap at 440. We filled that gap finally intraday. Now I'm looking for the market to continue this counter move all the way to fill the gap at 450 and slam into this resistance line. Either take it out intraday or a fake out breakout, maybe intraday, maybe 1 day, and then immediately reverse 1 day later and close below it. I think once that happens, sentiment will turn extremely bearish. I'll also be looking for bearish divergences if that happens. Like what exactly? Well, I'll be looking for the PPO to make a lower high. I'll be looking for the stochastic to make a lower high. I'll be looking for the RSI to make a lower high as the market fills this gap right here or moves slightly above it, create a false breakout. And that will be that, in my opinion, that will initiate the final stage in the crash, and that is a close below this support line. So I wanted to start with the thumbnail from the last video to highlight exactly what I meant by that thumbnail. The Last Supper is this rally. That's why they're colored the same thing, dark red. The Last Supper is this final counter trend rally to hit resistance and then reject and come back down. I have the rally coming up from the support line. That's exactly what we had today. Came down to the support line, broke intraday, recovered, and we're now setting up for a counter trend move. The RSI is rallying out of oversold territory. PPO about to produce a crossover. The stochastic has already produced a crossover yesterday. So this is now a double bottom of sorts. It is a lower low. That's the ideal scenario that I discussed yesterday. This is the absolutely ideal scenario. Complete a lower low, tag the support, move all the way back to resistance, tag this resistance, and then initiate the crash sequence. Okay, let's take a look at the different sectors today. Leading was healthcare, lagging was utilities, industrials, and cyclicals. So it's a bit of a mixed bag, but the market is leaning obviously more bearish. If we take a look at the stock market map, a mix of green and red, but mostly red, some minor green, things like Tesla, Meta, Apple, slightly up on the day. Semiconductors still very red. We take a look at the different indices, they're all down roughly 0.3% to 0.2% depending on what index we're looking at. On the daily chart, we did create this hammer candle at support. We had this hammer candle at support produce a vicious rally. I'm expecting a counter trend rally now, but I do expect this rally to fail at resistance, this resistance, or just slightly above it. If sentiment is extremely bearish, I expect this counter trend rally to fall short of all of that and actually fail at 447. What other indicators support this thesis of a counter trend rally than a sell-off? Well, smart money. Let me show you exactly what smart money has been doing. This is the smart money up top, high yield bonds, dumb money down below the S&P 500. We call them smart money and dumb money because the bond market is 5 times larger than the stock market, and bond traders have shown a consistent track record of getting things right more often than the stock market. That's why we call this smart money. Where's the divergence? Very obvious divergence. Here it is. Double bottom, higher low on the smart money, double bottom, lower low on the S&P 500. This is the typical kind of divergence that I would look for a counter trend rally, for a relief rally to start. So I'm now waiting for that relief rally. I expect that to last anywhere between 1 to 2 trading sessions. So I'm looking for a rally tomorrow and rejection, or a rally tomorrow and another rally Thursday and then a rejection. So I'm open to both. I'm open for 2 days of rallying or 1 day of rally. Doesn't matter to me. I'll be looking for signs of rejection at 447 on the S&P and at 450 and at 453. The earlier the rejection happens, the more bearish the outcome is. What about the VIX? Let's take a look at the VIX. Remember, legends, always, whenever the VIX is trading above the 50-day moving average, this green moving average, the market is in a downtrend. Whenever we're below it, the market is in an uptrend. We're now trading below it. The market is trying to form an uptrend. However, we made a high followed by a low, lower high, lower low. It is now starting to look like a new downtrend, in my opinion. The VIX did reject at the 50-day moving average. Let me clean this up for you. Here it is, legends. The VIX did reject at the 50-day moving average again. Now the bears will have to look for a close above the 50. I think that could happen either Thursday or Friday. So I'm looking for a rejection on the S&P 500 here, either Thursday or Friday. And after that happens, I want to see the market begin a precipitous sell-off all the way down here, and for the VIX to produce that breakout. If we get a close here, legends, below support, and the VIX closes above the 50-day moving average, that will be the beginning of a new significant downtrend, and that'll be the cusp of a new stock market crash. What are my targets for the crash on the S&P 500? I'm looking for at least 20 bucks down. That's down from 450 to 431 or 430. Fill this gap. That's my first target. My second target, if we're bearish enough, is to move all the way down to 420 to fill this key gap at 422, maybe undercut it slightly and tag the 200-day moving average. On the NASDAQ, we have an exceptionally important development today. Yes, we formed a hammer candle, but finally we broke this support line. The S&P 500 breaking this short-term support line intraday is the first warning shot that something big is coming. The NASDAQ 100 breaking this major trend support. Look at this trend support. Major trend support. This support line, legends, held every single major bottom in the NASDAQ since the October bottom. A break here is significant. It produces two downside targets down to 355 at least, and down further to 332. 332 is my most likely scenario. I give 332 and above 50% chance of happening. 355 and above 80% odds of actually getting there within the next 6 trading weeks. Now I expect a counter trend rally just like the S&P 500. However, I expect the NASDAQ to either underperform on the counter trend rally or ever so slightly outperform but come significantly lower than the S&P. So I expect the NASDAQ to make a lower high as the S&P 500 potentially makes an equal high or a slightly higher high. That'll be another bearish sign, another bearish check mark if the NASDAQ makes a lower high. In addition, legends, the more we trade through a trend line, the more damaged that trend line becomes and the less support it will carry. I think we'll trade a lot through it in the next handful of trading sessions, then continue lower to 355 either by the end of September or early October, and even lower all the way to 332 by the end of October. So this target is the 431 equivalent on the S&P. This target is the 420 equivalent on the S&P. All signs now point toward the NASDAQ beginning a huge, significant correction. Notice, legends, how far the price action is away from the 200-day moving average. Even in raging bull markets, after a major bottom has formed, we usually get massive rally just like this, then a significant correction to reconnect with the 200-day moving average at least. So that's absolutely within reason. The McClellan Volume Summation Index still pointing down, still looking very weak. We do have a hammer candle. That means we should get a counter trend move. But again, I expect that counter move to fail and produce a vicious bull trap and a more vicious crash. NASDAQ Summation Index continues to move down quite often, legends, and I talked about this several times just several weeks ago. We usually get a double bottom on the McClellan oscillator with a lower low on the second bottom, and usually that begins to mark the end of the sell-off. We're not there yet. On the NASDAQ Composite, I expect a sell-off to 13,100 and even lower to fill this gap at 12,500. Let me add that level. I'll make it green because this is going to be a great time to buy, to actually buy. Tech right now, massively overvalued, led by the Magnificent Seven. I think that's a horrible name, crappy name. But things like Nvidia, Apple, Microsoft, etc., they're all breaking down. Remember to sell in September. That will be the motto after this counter trend rally is over. Fed meeting tomorrow at 2 p.m. I expect the Fed to not raise rates at this meeting. If they hint at an additional rate hike in November or December, I expect a negative market reaction. If they don't hint at all at anything and they kick the can down the road, I think the market could have a reactive rally to the upside and then get rejected again, legends, to initiate the crash sequence down to 431 and lower to 420. What about the CPC put to call ratio? Is it trending down? Still hasn't produced a buy signal. I expect this buy signal to come in after the first stage of the correction is over. After the S&P is back down at 431, I expect a counter trend rally back up to 442, right? Break, come back to 442, then continue lower. That's my expectation, a lower low in October. And that's actually in line with seasonality. We usually get a lower low in October versus September. That's my expectation. A tradable bottom at the end of September at 430 on the S&P, rally back up in early October, trap more bulls, come back down, form the lower low and final low for the year, then start making higher lows and higher highs to end the year with a nice holiday rally. If you like this video, legends, slap that like button right in the face. Smack it in the face. If you want to trade the market with me, check out the Money Time Machine trading community. The link will be in the description below to join us through Patreon. It's about 35 bucks a month if you go for the annual membership. It's a single annual payment, however, it averages out to roughly 35 bucks a month. And it's the absolute best way to support the channel and allow me to bring more of these videos to you, legends, completely for free. Other ways you can support the channel is to join the YouTube membership. The YouTube membership does not include access to the trading community. It is not related to the Discord community or Patreon. If you want to join the Discord community, that's through Patreon. If you just want to purely support the channel, you can do that with the YouTube membership. And that will help me produce more YouTube content for you and eventually allow me to actually hire folks out to produce more and more of this educational and market analysis content completely for free. If you watched the video till the end and you did not enjoy it, I do thank you for your time and attention. That's all I have for you today, legends. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow.